it was in their best interest to sell me that story. And that's good. And it all makes sense. And they are right. But if you buy into a story for the right reason and you get the timing off, then it kind of doesn't matter. And as a first timer, you're probably going to get shaken out.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today, we have the pleasure of interviewing Fabi. Fabi is from the Next Big Rush. Fabi focuses a lot on commodities and does a lot of technical analysis and in-depth research on specific companies and how people can benefit from the commodities bull market. So I hope that you all enjoy this conversation. Please be sure to hit the like button and the subscribe button if this is something that appeals to you. And I hope that you are able to gather some valuable information from this talk. Thank you. Hey, Fabi, how's it going today?
I am doing really well, Daryl. How are you?
I'm doing good. I'm blessed to be above ground and be here today. Glad to be able to talk commodities again.
I love this. It's probably one of my favorite topics. So you're gonna have to cut the conversation short because I could go for longer than we probably should. We would bore your viewers out of their minds if you just let me loose.
Okay, gotcha. I'll let you know if we get in a little too technical.
No
But
problem.
I mean, you've been in the space for a while. I really love like your channel, The Next Big Rush. I
Thank
love
you.
the intro where you talk about like this is a life-changing opportunity for people to be able to build wealth. There's been a lot of talk of a wealth transfer, even in the United States. We have the baby boomer generation, which is one of the largest generations that's coming of age, and there's expectation that that wealth is going to be transitioned or transferred down to the millennial generation and so on. And so this seems like just an opportunity for a lot of people to be able to build a massive amount of wealth. And so it seems like you're on with that same story.
Yeah, absolutely. I believe so. And when I came into this market, it was actually it was my pure belief regarding that wealth transfer, which was all fine, but I got the timing completely off, right? And so I basically came in by buying silver at the top in 2010, 2011. And then, I bought the little silver coins. I was just loving it. Good thing that, because we're talking about so long ago, I was in my 20s. It's not like I had much money to go to put towards it anyway. So I was playing with, baby money for sure. But for me, it's what I had. It was my savings. And as I saw the prices of especially silver, I had a lot more silver. Still have. I'm still holding the silver versus the gold. But as I saw the price come down, I kept hearing, from all these YouTubers and analysts and research guys that the real leverage was in the miners. And so, being young and stupid, I thought, why not? Leverage means that when stuff goes higher, it goes much higher. Obviously, the downside is also true, but it took me on a journey that has actually, kind of become my profession now. And now what I do is, I have a newsletter in the space, The Next Big Rush, and I report on junior mining stocks and news and what's happening every single day in the market. Uh, Absolutely wouldn't change it for anything. I'm absolutely in love with this market and this industry. And one thing for, the people listening to us is when you hear something like this, because I've heard the whole, the like it's a wealth transfer from the baby boomers to, like the millennials or whatever other generation. You have to filter that message based on who is telling you that message and why they're telling you that message as well. So for me, what I found, and the reason why, I actually made a video about not buying any more physical silver for myself, because to me, physical silver and gold are money and not speculation, or a way to build wealth, so to speak, more to preserve wealth. So you got to have some wealth to begin with. Is that a lot of those guys who were selling that story were selling silver coins, which is fine. But I bought it all from them, right? And so it was in their best interest to sell me that story. And that's good. And it all makes sense. And they are right. But if you buy into a story for the right reason and you get the timing off, then it kind of doesn't matter. And as a first timer, you're probably going to get shaken out. So yeah, we could go down a billion different roads from what I just said, but those are my thoughts.
Yeah. That's very, very true. So if you were buying in the 2010-11 time frame, the baby boomers started hitting retirement in 2008, and there's about a 20 plus year span of baby boomers. And so each one won't be the age of retirement until 2031. And so it seems like you were sold a story that was very early. And during that time, there was a lot of FOMO, which when you look at the gold and silver chart, just charts of just how far it skyrocketed, it's like things don't go up forever, and
Yeah.
you were young during that time. Like, I'm sure, like, obviously now, like, you're
I
like,
had no idea what I was doing. It was all secondhand beliefs, right? It wasn't my own belief. It was just something that I heard from other people. And one thing also to note, Daryl, is the mistake that I made, I think, that I try not to make anymore, is I didn't associate the story with any numbers. And so now, for example, I talk a lot about uranium, and I'm heavily invested in uranium. Most of my portfolio is, uranium focused. I know the numbers behind the uranium story. I know that we produce about 140. Should I even say that? Because, production isn't probably going to be as high as what we anticipated, but let's call it 140 million pounds per year. And we consume, something like 190 million pounds per year plus. Now, I didn't know those numbers for silver. I didn't know those numbers for gold. And so because I didn't know the numbers, I didn't understand why the price was going up and why it was going down, and if the supply and demand imbalance was there. And so as much as, the story is correct, we have to go back and look at the numbers. If you can look at the numbers and say, okay, this makes sense, I know where it's coming from, then you're still flying an airplane. It's still difficult, but at least you're flying an airplane while being able to look at all the different buttons and everything that goes into it, and not completely blind.
yeah, that's very true, especially just having the factual information in front of you so that you can make a conscious decision of whether the likelihood of this asset is going to go higher based off of these particular facts. So just take us back a little bit, right? So you got into the commodities around 2010, 2011. Uh, what drew you to that? What drew you to that? Like, obviously, people were selling stuff. Like, do you remember the first video you saw on YouTube, or what? What triggered you to take that action to start investing in commodities?
Funny you should say that, because I do remember what the concept behind the first video that I watched was. I don't remember who it was by. So some of the first videos were Mike Maloney's videos back when. But the first video I saw was a guy explaining cycles. And that is still to this day what attracts me to this sector. So he had, some sort of drawing that explained the up cycle and the down cycle in the commodity space, and just he just basically said, every 20 years, 15 years, whatever the time frame was, we have a down cycle in commodities, and then we don't produce enough of what we need because it's, the prices are off and
And that was at
production.
480p, by the way.
Yeah, oh, it totally was. Yeah. Totally was. It was very pixelated and the sound was awful. But still, I paid close attention. And that is what really drew me in, because I thought, okay, so we have here the underlying infrastructure to what we know as the real world, right? Everything that we touch, unless it was planted, farmed, or something like that, it was mined. And so things that we need vary in price based on what they have been doing for the last few years. So if we're on an uptrend, eventually what happens is we produce too much of it, the price comes down, basic supply and demand dynamics. And so it's that predictability that really drew me into the space, because sometimes what we go through is, unfortunately, most commodities come down and you have to be really patient. But in reality, you always have at least one commodity that is doing really well, even though the others aren't following it. So we had, a great lithium run, and now that seems to be over. Now we're having a uranium run. I don't know how long that's going to last. But before that, I lived through a nice gold and silver run. And I think that coming up in the next, I don't know, call it decade or whatever, I think we're going to have a massive copper run. I think we might be in the middle of an oil run, although I don't really understand the oil trade very much. I think there are too many variables, and it gets, a little bit macro for me. But there's always something within the commodity complex that you can look at and say, this here is historically undervalued. I'm going to go make a bet that the price is going to come back up. And then it does. If you're willing to wait and you buy responsibly and do a little bit of homework, it does. And so it means that if you stick around long enough, to me, this is just, like the best place to build wealth, if you are willing to learn it, because whatever happened in the past is going to happen again. And so that cyclicality of it is just very, very attractive.
Yeah, definitely. So you ended up, so you got into the trade, precious metals, and the collapse of the silver price didn't scare you off. You went and did some more research and started learning
Yeah.
learning more, which a lot of people got scared off. I would remember watching a video on Dave Ramsey's channel with a couple that had bought silver at about 40, was it 40, $45 an ounce. And they were just sitting on it for a while. And then he told them to sell it. And so many people got shooken out of that trade, and silver still trading well below 50, well, about 50% off of its highs, a little over 50% off of its highs. And so you getting into the trade, was like, was that you seeing just the opportunity, or did you grow up in a home that was in poverty, or like kind of what was like some of those underlying um values that really appealed to you? Because some people may see an opportunity, like we saw, many people jump into the crypto trade back in 2021. You had Super Bowl commercials, you had all these superstars advocating for certain crypto
Matt Damon.
products. Yeah, and everything. And many people were like, hey, I need to get in this. But I
Yeah.
think a lot of those people got into it because of either, hey, I can make, a life-changing amount of money, or well, I think everyone wants to do that, but some people may come from those backgrounds of like being in poverty. Like for me, generational poverty is a big thing. And so when I'm looking at the commodities trade, I'm thinking through me coming out of that generational poverty
Mhm.
mindset and that status, and creating life-changing amount of wealth. And so do you have any of those underlying factors that played into you wanting to dive deeper into this story?
Yes, for sure. But let me try to explain what was happening and why I think that I was very attracted to this. And some people, I think, listening will, feel familiarized with my story. So I wouldn't peg our family down as being poor because I was born in Brazil, so technically a third world country. And for us, being poor means like really, really, really poor. It would be a level that would be unimaginable for the average American. And
Mhm.
so I never used that word of, hey, we're poor or we're broke or whatever. What I would describe our family situation as would be we were financially bipolar. And so my parents, they gave us the best, just the best education that you could possibly imagine that they could afford. And they gave us lots of safety. And so they would not accept to live in dangerous neighborhoods. We didn't go to public schools, which in Brazil actually makes a lot of difference to public schools. You go to, you're going to school and your colleague is like a drug dealer and they take a gun to school. So it's a big deal. And so they spent a bunch of money that they never had in the things to make sure that us kids were safe. And so what happened is any sort of like extra little money that they had, they, I think, tried to, reward themselves. And so it would be kind of hilarious because I remember distinctively when I was a teenager, we went to one of the most expensive schools in Brazil in the state of Sao Paulo. It was an American school in Brazil. And so we paid in dollars. You can just imagine, like a lower middle class family trying to, pay for something in dollars for 3 children. And then what happened was, whenever some money came in, because my parents worked really, really hard, I think each of them had 3 different jobs at one point. Uh, any extra free money and they would like travel. So they would travel to Europe or they would, buy a new TV or like do something like that. But we couldn't invite our friends over from school because we had no food to give them.
Mhm.
And so it was like not knowing and not having that sense of freedom with the money. Like there are so many more no's financially that we, had to face as a family and as children that I knew from a very young age that I was not gonna go down that road. That for me, as soon as I start making money and then I started to work when I was 17, dropped out of school and started to work in order to help support the family and because I wanted money and I didn't want to go through that anxiety of not knowing, like how are we going to pay the bills? How are we going to afford food and basic items like that? I think that is the stuff that made me just think of wealth building in a very different manner, to say, hey, like I don't want my kids to go through this. I don't want to go through this myself. And when you're a teenager, like I don't know what you were like, but I ate a lot as a teenager. I could go through a bunch of cereal boxes. I could go through,
I love
a whole
cereal.
sack of rice. I could eat anything in large volumes. And I remember like one day I opened the fridge and there's cabbage because we used to have rabbits and jam. And that was all there was for food. And so that shock, kind of makes you go, okay, this is it. I am not going to live like this. I'm going to work. I don't care, how hard I need to work, but I'm going to work and I'm going to save and I'm going to have a cushion. And then I'm going to learn how to build wealth because I want to move away from that feeling so much that I don't ever want to even think about opening the fridge and only having cabbage and jam. So
Mhm.
for sure, that played a massive part.
Would you say that obviously your parents, worked hard to give you all good education, keep you all safe, and things of that nature? Um, I don't. Would you say like obviously that was a piece of it, but then like there's also this other side of it where it's like you're creating something that isn't really feasible.
Absolutely, 100%.
Gotcha.
And there was even this disparity of the kids we went to school with, you know, like we didn't own a car. And some kids were chauffeured to the school, quite literally. And so it wasn't sustainable. It was just them doing their very best,
Mhm.
for as long as they could. But it kind of gave you also a taste of wealth because my friends were wealthy, much wealthier than we were for sure. And so it didn't seem like it was unreachable, right?
Mhm.
Because we had a little bit of a taste of hanging out with people that were in a much better financial position. And I think that's important too, for people to realize that, and I've come to realize that as an adult, especially people who are doing much better than we are financially aren't necessarily smarter than us. Some of them don't work super hard as we would imagine. They definitely don't have, 10 times as much time as the average person. It's just that the way that they use their time is so much productive. And so that will really open my eyes to the possibilities.
Yeah, yeah. I mean, you were put in a around people who you all aspire to be like, and so that can be, obviously, not every wealthy person has good character, right? But for me, like I grew up, in the streets. I chose the streets too, so it's part of growing up there and then choosing to go that route because my mom's raised me in church, right? Um, and I was surrounding myself with friends who were, drug dealing, all of that. I ended up getting into drug dealing and stuff. And so, we were working to build these kingdoms that could just be taken away from you, whether you getting arrested,
Mm,
you getting severely harmed or even dying, right? Um, and then everything is lost. Like, I've had cousins who have been big drug dealers. I mean, one of my cousins in particular, he's told me he's been a millionaire twice. And and, and every in both times, like he went to prison and it was all taken away from him. And
mm.
so it's kind of like now like I'm surrounding myself with people who I aspire to be like in terms of, hanging out with, Rick Rule or other folks within the space because I want to be motivated, I want to change my family's financial trajectory. So I'm changing up the circle of who I'm around.
That's the way to go. That really is the way to go. And the most rewarding thing is when you can turn it around like what you're doing right now at any level of the game and help other folks out, right? Because you could be doing this just for yourself and by yourself, but like you're out here putting out content and trying to bring ideas to the table so that people, you know, don't have to go through some of the things that you had to go through. And so I commend you because that there is absolutely nothing. There's no contract or check or sponsorship that to me pays better than me getting, a DM or an email that says, "Hey, I invested in that company that you mentioned and I doubled my kids
Yeah.
account in like 6 months. Thank you so much. Their college fund is set." Like that to me is worth more than any amount of money. And
Yeah.
so props to you.
Yeah, yeah, definitely. And now, I'm getting more vocal about my story, because I remember going to Rick Rule's symposium and, I met some good friends, people that
Nice.
are, owners of junior mining stocks and exploration companies and stuff. And, you know, now I go out to eat with them and all these things when I see them at these conferences, and they are just like interested in my story. They're like, "What's your story?" And I'm just telling them like, "Hey, dog, I'm from the streets, man." Like, you know, and so
And this is the best industry for it too. Like
yes.
people are super approachable. You know, just the other day, I've been speaking to my husband regarding, new clients and going to speak at events and board positions and things like that. And he kind of turns around and says, I don't know how you pull out of this out of a hat. Like, how do you do this? Why are people so interested in talking to you? I'm like, you don't understand. It's this industry. And so for young people watching this, if you're interested in building wealth or doing something cool in an industry that is very cyclical, so whatever happened happens again, and you're patient enough and you're willing to go out there and talk to people, this is the place to do it. I know I'm biased and there's a lot of different ways that you can build wealth, but I've never seen an industry where you could literally approach virtually any CEO, sometimes of billion-dollar companies, and you can have a conversation with them, or you can have them on your channel, and you can talk to billionaires such as Rick Rule and Frank
Mhm.
Drustra and other guys. They're super approachable. I've never seen an industry quite like this because they need money all the time, and so they want to talk to young people with YouTube channels or without YouTube
Mhm.
channels. It doesn't matter. They want to make sure that the next generation is there to take things forward, and there aren't enough of us. So
That's true.
we're
Demographics
valued.
are changing a lot. Like demographics are changing. Rick talks about that a lot. And you know, for me, I just want to be on the headlines. Ex drug dealer makes a fortune off of commodity investing in commodities or
It's a
some
heck of a
some
story.
some headline like like that. Like people would try to just wreck their brain trying to put the two together. So yeah, definitely you know, some good information there. So I do want to talk through specific commodities. So we were just talking about uranium a little while ago, and you mentioned that you know we use about 190 million plus million pounds, and we're currently at 140 million pounds, maybe less, going forward. And so there's a deficit there. My question I have about uranium is, what are you seeing with the demand increasing in terms of geopolitics, military? I mean, there's just it seems like it's going to like more uranium is going to have to be produced. I mean, I'm reading these articles about Iran allegedly enriching uranium. You know, obviously Russia has enriched, I think you enriched uranium, and then you have Kazatomprom and there's like kind of these geopolitical factors and military demand. And so do you see that increasing in the future?
In short, yes, but with a caveat that I have never been able to make money based solely on where I thought the geopolitical situation was heading towards.
Mhm.
And so, for example, we could say that right now in the Senate in the US, there's a bill that's going to, be up for voting regarding banning Russian uranium. On the surface, that would look like, there's enough support backing it up and that it's going to get approved. And if it does, and Biden has already signaled that he would sign on it if it goes through, then you'd think, my goodness, if and a big part of world production comes from Russia, and so this would be a big deal. But the thing is, when it comes to geopolitical issues, and yes, that could absolutely make the price of uranium go insane. But the caveat is the market is looking for unexpected things, and so if the market has already priced in that this is going to go through, then it's already priced in, then the whatever the price is today, and I'm not going to quote because it's going up today a lot, and so it's going to be out of date by the time that you publish this. But we have to understand that there's like different levels to decision making when it comes to investing. So there is the piece of news versus how many people expected that piece of news, and is the price going to, surprise to the upside or the downside because it's already priced in or not priced in. So what's happening right now is that Kazatomprom, came out and said that they're likely not going to be able to produce much more, if any, extra uranium in 2024 versus 2023. That surprises the people who were expecting them to really increase production. Now, who are these people? My guess is that these people are mostly the utility buyers that need that fuel. And so if you're a utility buyer and you need that fuel, you're going to come into the market and you're going to have to buy because you know that, the Kazakhs aren't going to produce anything extra. And so,
Quick
yeah,
question.
it's about guessing what other market participants are guessing.
So with utility companies, you mentioned them coming in the market to buy. So is that them buying off the secondary supply, or is that the term market? Like, because you have it's like almost two different markets. So you have utilities that come and set contracts for uh, uh, longer term at a specific price, and then you may have some that may need some right now or something like that.
Yeah. So most of the uranium market is what you just mentioned, the long-term market. It's basically, let's say I work for, Constellation, and then I need to buy, I don't know, 6 million pounds of uranium for the next 3 years. And then I go and knock on Kazatomprom's or Cameco's door, and I go, right, guys, we are looking to buy this much uranium, and we're looking to pay this much, or how much are you guys going to be able to deliver versus, the price, etc. And then there's negotiation back and forth, and then contracts are signed. The contract values are always secretive, which, I don't agree with as a shareholder, but that's okay. That's what the market gives us. And then what usually happens now in this cycle that we're living through is that, the producers are looking at, this long-term market, and they know that they've suffered for like the better part of 10 to 12 years, not making much money whatsoever with their production. And they're looking at the much smaller and thinner spot market price, which is, just the short-term market. And they're trying to peg a lot of these contracts somewhat to the spot market price. And so they are separate, but there is a link between them that's getting stronger and stronger. And so it's really, the spot market is meant for last minute purchases or top ups and things of that nature, right? But it's what we as retail investors have the most access to, and it's the quickest thing to check. And so you'll always see, people quoting, "Oh, we have, crossed the threshold of $100 per pound," and those numbers that get thrown around are the spot market price. And then most of the market is actually trading on a long-term basis. However, it wouldn't be wise for us to only look at the long-term basis because, first of all, we don't know for sure. Secondly, you have to pay for a separate, service in order to find out what those values are. And when they're collecting the information, nothing says that they are given the right information. There is no guarantee that the information is 100% correct. But on top of that, it's, up to 2 months late. And so the spot market is what retail uses to gauge the market right now. And it's probably going to continue to be like this for a very long time, even though it doesn't represent the whole market.
Gotcha. So if you could take us back a little bit, so 2007, 2008, uranium hit $140 a pound. Obviously, we had the global financial crisis and many things went down. So were companies contracting at $140 a pound at that time? Like, was there a rollover where, after that time, when the price dropped, contracts were renewed at a lower price? Like, what was kind of happening there?
So I wasn't around, and so I just need to go by, people that have been in the industry much longer than I have. But my understanding is that contracts were largely unaffected by that short-term spike because it didn't really stay there. It was a spike and then it came down. And then, progressively as new contracts were signed, then they would be upped to some extent, but the speed that, the spot price took off meant it so that the only companies that really made the most of it were the ones that were providing the spot market with material. And you'll have some companies that have pledged to do this. UEC is one of them. I am not affiliated with them. I don't currently hold stock, even though it was, I think, my first ever uranium stock. They don't want to sign long-term contracts because they understand that the spot market is much more explosive. And because of that, they want to, be selling into those numbers. I don't know if they're going to sell directly in the spot market or just, have contracts that are exactly the guarantee of X amount of pounds for whatever the spot market is at the time. But I believe that the reason why we're seeing the spot market be so prominent right now and contracts being signed somewhat tied to it is because producers missed, that chance in the last cycle and they don't want to make that mistake again.
Hmm. Okay, gotcha. And so there's companies that hold physical pounds of uranium. I mean, we have Sprott, and then we have Yellow Cake, and then we have some of these other companies, Denison, I think UEC, and Uranium Royalty has some pounds. And so in terms of like the physical trust, for example, um, Sprott, what I'm hearing from about Sprott is there's no plan to sell. Like, and so I'm wondering, like, are they just wanting to keep the market tight forever? Like, are they ever gonna sell? Like, what's the goal? What's the plan there? Like, I'm just trying to. I haven't looked enough into it to really understand what the plan is there.
Okay, so as it is right now, as they are currently structured, they cannot legally sell any pounds, which for us as investors is great, right? Because it means they're gobbling up pounds. And as Rick Rule would say himself, they're going to uranium heaven. They're not going to be sold down the river. They're not going to be lent out and things like that. And so with that, in order for them to be able to sell, they would have to change the basic structure and documents of what forms the trust. They've tried it in the recent past and then backed out of it. And so as it stands, they cannot do it. Now, what is going to happen when the prices go much, much higher? I don't know. Can they be completely bought up by a country, by somebody like that's strategic? Can there be a force majeure clause of a government takes over their pounds? I mean, now we're stretching into something that I've never seen happen before, and I can't really fathom how that would play out. But they can't sell it, in short, and so they won't. And
Hmm.
before they're able to sell it, they're going to have to get trust holders or trustees to approve that change structurally. And so we're going to know that they can sell for, several weeks before they're able to. And that, if that ever happens, then that's going to allow us to, make better decisions to say, okay, now they can sell material. How much can they sell? Are there rules regarding how much they can sell? And then you're going to have to, pour over all their documents and figure out if they can affect the market in a negative manner in any way. Yeah, but they hold a lot of pounds. I think, they're near 60 million pounds now. So
Mhm.
those pounds are just being hoarded.
Yeah. Yeah, that's that's what it looks like. So, and with so obviously we have that dynamic, and then the so other companies, they're just holding out until the price goes higher, till the price goes to a number that they are willing to let go of those pounds at, correct?
Yeah, and I mean, Denison has already come out and said that they've sold a little bit of what they hold. I think they were holding 2 point something million pounds, and they sold, I think, 200 to 300,000 of those pounds, and they're planning to sell a bit more this year. For Denison, I mean, I think it's great that they can sell it in an elegant manner slowly as the market goes up. These guys, they understand the business, they understand the uranium market, and it means that, their cost of starting up any of their mines is going to be so much lower than your average competitor, because they have been holding on to these pounds for a long time, and now that they're at much higher prices, it makes sense for them to start selling a bit now, because in order for them to become a producer, they're going to have to make investments. And so they need cash. They can't just hold the uranium. That's not going to push them to the next level. And they're not going to get a massive re-rate by just selling pounds. They're going to have to sell pounds because they need the money in order to invest in CapEx and, make sure that uranium is starting to be produced from their projects. So yeah, it's looking good, because it seems like the people who hold the most amount of pounds right now, they either can't sell it, don't want to sell it, or if they sell it slowly, which is perfect.
Hmm. And so you mentioned the CapEx to bring more production online. Is there any trends? I mean, obviously, with the government, at least the U.S. government, passing bills. I mean, we passed the Advance Act, and the topic of uranium and nuclear has been in the talks for the last couple of years. The sentiment has changed, um, and some of these companies have to get like this licensing, and jump through all these hoops to get production even going. And so, and we don't have as many. I don't think we have as many companies as we did in the 2007 time frame. 2008, I think it was 60 something companies or something. Um so I'm kind of wondering, if what does that look like in terms of bringing more production online with the red tape, the political red tape, and the licensing and things of that nature.
That is the thesis. Okay. The reason why I am so bullish uranium still, I started buying uranium stocks in 2014, a little bit here and there, but wasn't really committed to the thesis until 2018, 2014, yeah, to 2018. And the reason why now I'm a lot more bullish than I was then, even though then prices for stocks were much, much lower, is because, and you can look at gold, silver, whatever else to compare it with. Things go wild in the world of commodity, not when you have a bunch of demand, because demand is very slow and you can see it into the future. Somebody, some country comes out and says, hey, we're going to triple nuclear capacity in the next 30 years. Yeah, okay, but it's going to take how many years for you to start buying uranium?
Hmm.
Like we'll all be old and gray before that starts to happen.
Hmm.
But importantly is, how does supply respond to the increased demand? And the way that supply is, you know, coming online is very slowly with lots of production hiccups. And the mines that we expect to come online, even this year, next year, are very small in comparison to what we have going on. And there is no hope and a prayer to get them to produce more faster. So you mentioned something that's very important, Daryl. You mentioned permitting. When you look at a gold mine, if you really know what you're doing and you have a really great project, from the time that you find gold, in a drilling campaign to actually having a mine, you're talking probably 10 years. For uranium, that's extended, call it 15 to 20 years, because you're talking about, material that's a lot more sensitive. Nobody is going to be able to fast track a uranium mine, because who wants a uranium mine close to their house, right? This is something that it can affect the environment, it affects the people around it. And even when you do have, all the permitting just check, all the boxes are checked and everything looks good, you have the issue of we're coming out of a 12-year bear market where nobody wanted to be in uranium mining. And in order to mine uranium, because, it's such a sensitive material, everything is specialized and everything takes longer. And everything requires an extra signature and an extra stamp and more money, more protection. And so you can just imagine, just training staff to act safely in a uranium mine is something that's very, very particular. Let alone actually do the job, let alone do the job to, a great standard. And who's going to teach these people? Because we have, a handful of producers, and those producers are trying really hard to ramp up their own production. And so if I want to build a uranium mine today, I would have to poach from just a handful of companies, people who are really experienced and are still half alive, to come and teach, my new guys how to operate a uranium mine. That's going to cost me a lot of money, because now producers that already have something going on, they can probably pay a decent amount of money that I won't be able to do as a newcomer. And so when you see management teams that have found uranium and been able to delineate a deposit, that is one type of skill. That's one type of job. To build a mine and then operate it, we're talking multiple different skills. And there just aren't enough people in the business available at a decent price to make that something easy, even if the permitting wasn't an issue, and the permitting is an issue. So if demand is growing as it is, and we're announcing all of these, nuclear power restarts and extensions and things like that, and so where we imagine there to be a drop off in demand, it's actually going the opposite direction. In the short term, where do you get the supply? I don't know. That's why the price is going up. That's exactly why the price is going up, because there doesn't seem to be a good solution for more uranium faster. And that is probably going to make the price a lot higher than it is right now.
Mm-hmm. Okay. Yeah, that makes total sense. How do you factor in the amount of nuclear reactors that are being built? I think China's building over 50 currently, and I forgot the numbers for other nations, but how does that factor in with the demand?
Yeah, so I believe that the number was around 150 in 15 years or something like that. I think they keep upping the number, to be completely honest, and they are very, very aggressive when it comes to uranium purchasing. And so in China specifically, you have a situation where the government when they come out and say, okay, we will build this, that, and the other, they will do it. You can bet your bottom dollar that they will get it done. Plus, they always make sure to have a lot of buffer in their fuel to make sure that they are not dependent on other countries. I wish the West had the same stance
Mhm.
in that when we try to build something, we build it for the next 50 years and we try to make sure that our children won't have to worry about, fueling up. That's not how we do it. It is how they are doing it. And so you're looking at, 22 countries that are going to triple their nuclear capacity in the next 30 years. You're looking at China. I missed a piece of news that came out yesterday that is the Czech Republic saying they need, 4 new plants as well. And so in the last 24 months, you have seen pretty much, you know, pick a country, and you'll find a country that wants and requires more nuclear capacity in the next, X amount of years. Now, obviously, that's future demand, but it means that they are not likely to close the older plants that they were planning to close right now, which is massive because it means that if you're not closing a plant, that's demand for today. The demand for today is what moves the price. And so they're signaling that they are now more pro nuclear than they've ever been, which is even more important than, super out in the future demand.
Mhm. Yeah, yeah, it's really fascinating how this is all interconnected, in terms of even like how we were talking earlier with uh, how long it takes to even build a mine. I remember listening to Robert Friedland talk about building this copper mine in Africa. I think it took close to 30 years or something of that nature. And and so when we're looking at the commodities as a whole, I mean, you're gonna need oil, you're gonna need all these metals, equipment, things of that nature to even get the uranium out of the ground. And so you can just really see how it feeds all with this whole commodities bull market. And I wanted to ask you about, so we did see more institutional investment come in last year, and most of them I assume, went to Cameco, URNM, and a few others, and probably some others. But so I had Cameco. I think I was in Cameco at $14, and I'm mad. I sold that one too. I didn't know what I had in my hand. I had something valuable in my hand. I didn't know what was in there. And so now Cameco, is trading significantly higher. So I'm wondering, at what point will we see more, like, are we seeing any trends with more institutions? Are they even dabbling in like the smaller caps?
That's a good question. I think they will, indirectly dabble in the small caps by buying ETFs. I think that's the only way that a lot of institutions are ever going to get involved with small caps. It is wild out there. There are, I think, today 150 plus uranium companies. And when I say uranium companies, they have uranium in the name. It doesn't mean they have any economic pounds. But this is compared to over 500 in 2007 in the last cycle.
You
And
should
so
correct
we're
me. I have my numbers wrong. I have my numbers wrong. You should.
it's okay. It's okay. I'm hearing these numbers and then I'm like, okay, like what really happened? And they're also secondhand numbers just to let you know. I mean, the 150 plus today is about right. I know that for a fact, but the 500 is what Rick Rule has told us, and so I'm gonna have to trust in on that because I don't even know how you would start researching for those actual numbers.
Yeah, he
Uh,
got relationships and all. I remember when the
yeah,
coup happened, and
and he was there, right?
yeah, the coup happened in was it Niger?
Niger. Uh-huh.
Yeah, and he was like, yeah, I got a contact over there, and I'm just like, dude, you got this. this information nobody else has.
Yes, yes. He's a very well-connected person, and you'll find that the best in the business are extremely well-connected. There's basically nobody that they can't get to with one or two phone calls. Uh, but just going back to it, we're looking at a completely different situation than we were in the last cycle, because in the last cycle there wasn't this massive deficit. There wasn't a nuclear renaissance of everybody coming out saying we're going to build more power plants. And what happened in the last cycle is that prices were going up and trying, adjusting slowly. But then what really set the fire to everything was the fact that a Canadian mine flooded. And so that supply, going back to it again, that supply wasn't going to be available anytime soon. And it
Is that
seems to
MacArthur
me
River or MacArthur or
it was Cigar Lake.
Cigar Lake?
It was Cigar Lake. So we're talking about, an ore body. I don't know how big it was back then, but millions of pounds at double-digit percentage uranium, which is like completely mind-boggling. But really hard to mine. And so Chemical, one of the best miners in the world, had a little bit of an issue, and the price spiked to 140, what would be actually in today's dollars just over $200. And so we are sitting here at $100 per pound in the spot market, and everybody is really excited, but we haven't even reached the nominal peak of 2007, when there wasn't a deficit, when countries weren't increasing their demand, when small modular reactors weren't a thing that people were talking about, and that's not even being modeled in any demand models. And so we're in the middle of the situation where the story is just getting better, and I'm scratching my head and I'm starting to feel really uncomfortable because I'm getting more excited about it. And I'm supposed to be less excited because the price is going up. I'm supposed to be thinking, okay, how do I exit this trade? How do I start taking money off the table, etc., which is what you're supposed to do when prices are going up. And I see myself in a situation where the more I know, the more information that comes out, the tighter this market seems. And,
More conviction you have,
the more conviction I have, which is, I guess, a good problem to have because it's working right now.
Mhm.
So,
And how would you say you balance that out with, because obviously, it's the information that we're getting causes us to have a lot of conviction that the price is going to go significantly higher. And but then there's like this wise investment side of things where even I was talking with Rick not too long ago, and he was like, yeah, take a little bit off the table, take your initial investment off the table. And I'm struggling with that because I'm just thinking like, I know this price is going to go a lot higher, like, and so I'm trying to balance, the wisdom of investing with the conviction of the asset. So how are you navigating that?
that's tough. And I struggle with clean exit strategies. And I'm not going to say that I'm great at exiting. I've missed out on, some much better exits. But what I try to focus on is the entry price, precisely because I know I'm not going to nail the top. I want to make sure that whatever I'm buying makes a lot of sense.
Mhm.
And so, for example, if I am looking at, let's pick a company here, Global Atomic, also not a partner of mine, but I do own stock in the company. So Global Atomic has a lot of risk to it because it's in Niger and the coup just happened. So let's put a value of, I don't know, 30% of the expected price is going to be off because of the coup. I'm just guessing here. And people can do this back home. Maybe they're a little bit more conservative. They only want to invest in North America, whatever. So let's pretend that it's never going to reach, its full value because of the uncertainty, politically speaking. Okay. What is the value of what they hold currently? What is the value of the assets? Well, you would have to go back to the report that they put out on their most important project, the DASA project, and you would have to update some of those numbers because they are projecting, I believe, $60 per pound uranium. Okay, so if this is how much they're supposed to be worth at $60 per pound, now that we're sitting at, call it 100, how much more would that project be worth? And then you have to do that math. Now, my attempt here is to just try to ascertain what's cheap versus what is expensive. As long as I'm looking at something and I still think it's super cheap, it's very difficult for me to sell. Very difficult. And because of that, it is a known rule of thumb in the market of whenever you get 100% return, you get a double, then you sell 50% to recoup your initial investment. That's great. Most of the time, I don't personally do that because I think that it's a great way of making a possible 10 bagger turn into a 5 bagger very quickly. And the market doesn't care that you want a 10 bagger, and the market doesn't care that you want a 5 bagger or 20 bagger or whatever you want. The market doesn't care about it. But I am looking at, some of these companies, and I'm going, on a case by case basis and asking myself, is this cheap? And can I make a case for this being cheap? Is the market going to realize that this is cheap? Is the company going to come out and revise their numbers to show, hey, we used to be worth $1 billion, now we're worth 2.5 billion? Are they planning on updating and republishing their numbers? And so it's more based on that I try to move on. And if I make a double, I don't immediately sell usually. But if I make a triple, I will take some money off the table usually. Mm-hmm. And so I just try to start shaving off. Also, if one company has a lot of momentum versus its peers, then I know it's not sustainable, and I start to sell some of that as well. And selling really needs to be, a phased action. If you just sell everything at once, you will feel like you missed out because you're not going to nail the top. And so I recommend people, not think of getting fully into a position or fully out. Just think about 20% chunks. And as long as you're thinking about that, technically you should do that when you buy as well. I usually don't. But it's good practice to do that. And as long as you're thinking, hey, I got a double, I'm going to sell 20%. I mean, why not? Like you just beat the market by a long shot many times over. So if you want to be, more risky and not, sell 50%, then, maybe take 20% off the table or whatever makes you sleep at night. I always try to think, okay, if something really, really bad happened and this crashed tomorrow morning, how bad would I feel about not selling today? And that usually helps me to, make a decision regarding how much to sell.
Yeah, makes total sense. And what's your take on the explorers? Are you touching any of the explorers right now?
I'm starting to like explorers more and more. The amount that the industry has put towards exploration historically has been very little due to the market, not caring about uranium or about mining exploration in general. But I like also stories of exploration that aren't all or nothing. So you have exploration that is all or nothing, for example, in the Athabasca Basin, which is great when you hit it. It is, it's the sweetest thing when an Athabasca-based company hits something because 9 times out of 10, the grades are so great that you don't even need to do anything. The stock will double, triple. The stock might triple before you realize it's a double, and then you can sell with a little bit more peace in your heart, knowing that you're well ahead either way. But people can drill for several years and not find anything. I also like exploration plays that are what we call brownfield exploration. So they know that the uranium is there, they just don't know how much and exactly what the shape of the ore body looks like because their information is old and it's out of date, it's not compliant to today's rules. And so, for example, most of the smaller companies based around Wyoming, Utah, etc., they know they have uranium there. They just don't know how much. And so when they drill, there's an expectation that something's going to come up. They just don't know how much. Awesome. I love those plays. And I think there is, something to be said about a US renaissance in the uranium industry, because the US used to be the world's #1 producer of uranium, I think back in, the 60s. And production went down to virtually nothing. As the Kazakhs grew and grew and grew, and the Canadians grew as well, the industry died in the US, and that is being brought back up. A lot of the smaller producers that are coming online this and next year, etc., they are US based. And so I also look at small companies that haven't yet moved, mixture of exploration companies, but know that with exploration you have to spread your bets so that you're not just buying one lottery ticket, but also a mixture of greenfield, which is pure new exploration, versus brownfield, which is known deposits. Especially in the US, there's lots of opportunity in that area.
Yeah, definitely. Yes, interesting. You mentioned that about the U.S. I had read a article from Cuppy, and that I think it was Cuppy. No, it was someone else, but it laid out the history of uranium, and so I ended up forming that into like a video. And I just went, browsing YouTube, searching up old uranium footage, and like in the 70s, there was a lot of ads and like commercials and things of that nature about uranium.
Yes, it was hot. It
Hmm.
was really hot. And we have to remember that this was back in the Cold War, technically speaking, right? And so Russia wasn't going to let go of any of their uranium, and the US, was stockpiling as well. And so they couldn't get enough of the stuff. They just, kept producing and producing and stockpiling up until the point where they didn't really need it that much because it didn't follow, the build out of nuclear power plants that were going to use it up.
Hmm.
But yeah, the US has been a thing that I've been pounding the table on for, I would say, at least 2 to 3 years now. And it's one of my favorite types of plays in this sector.
And during that time, I think it was the nuclear arms race, right? I think that was it. After the World War II, and then we obviously had the Cuban Missile Crisis and things of that nature, but there was like a real like competition between the US and Russia. I mean, you had the space race, you had the nuclear race, you had the communism versus capitalism. I mean, you had so many competition factors, and so when we see like the tension today, you're like, yeah, this has been uh, going on for a long time, and so yeah, I definitely understand that. And then I think from what I was researching when I was researching the collapse of the USSR. I forgot the guy's name. I will butcher it, but whoever was president at that time, I think he signed a bill for the decommissioning of the Russian nuclear warheads and such, and so that helped feed the supply for a while. Then that came to an end, and it's a fascinating history around it.
For sure. And the key to this is to understand that whenever we mine gold or silver out of the ground or copper, usually it comes out in a form where you can then sell it in the market and use it, right? I mean, obviously it gets further refined, etc., but that is the product that you're selling. For uranium specifically, uranium is not a final product in anything. It is an input to something else. So it's input to nuclear fuel. And so you need a concentration of about, 3 to 5% of the right isotope of uranium. I'm not going to get into it because I don't know how to get into it. It's like way too advanced, and I didn't do well in physics or chemistry in school, so I won't. So we're talking about 3 to 5% for fuel. That's the concentration we need. But for an atomic bomb, you need 90 plus percent. And so we were producing as a planet at a rate to make bombs at 90 plus percent. And then, we've decided on a more peaceful resolution. Let's use up or dilute, that 90 plus percent material into 3 to 5% material. And so you had highly concentrated material that you only need a tiny portion of. So that program lasted a long time, and it was able to, be a really strong secondary source in the market for a long time. But that's over. Those pounds are gone. They've been used up, and we have turned them into electricity, which is much better. And also, it hurt the industry as a whole, but it's precisely, the fact that it hurt the industry that made it such an interesting opportunity for investment later on.
Yes, that's true. I actually have some notes here. When you had brought up, you kind of got to the science a little bit. I have some notes here from Rick's uranium boot camp. That kind of
Nice.
goes through that whole
That's
process
it.
and everything. And so I haven't looked at this in a while, but it's definitely something I need to go back and just reacquaint myself with for sure. So yeah.
Yeah, that's it. That helps. It's not crucial that people fully understand all the steps, but it does help, because when we're talking about, different concentrations of uranium, then it really does make a difference on, supply and demand numbers. And so it's important to understand the dynamics.
Yeah, Rick brings on some people that just gets in the weeds on. I remember I think it was the silver boot camp I went on, and the geologist was talking about how it's formed from the volcano and all this stuff, and it
I
was
missed that one. I'm trying to like buy the access back, and I can't find the link. So yeah, I might have to call up Rick and see what's up with that, because I would love to see what went down, but I completely missed it.
yeah, definitely. Well, Fabi, I appreciate you coming on the show. We obviously didn't get to the other commodities I wanted to talk about, and hopefully we can have you back on.
Mhm.
What's a good place for people to find you? I know you're on Twitter/X, and then you have a YouTube channel, which I'll link as well.
Yeah, if people want to reach out to me, just follow at the next big rush anywhere, whether that's YouTube or Twitter or whatever. thenextbigrush.com is also the website where I publish my daily newsletter. I'm always around, plugged into this market. And thank you so much for having me. I am sure that we will do this again, because there's so much more to talk about. And hopefully
Yeah.
we'll be able to, talk about platinum and gold and all I'm seeing in the market.
Yes, for sure, for sure. We'll be sure to schedule that. Thank you for coming on.
Thank you, Daryl.